Well, Jan van den Berg is from African Merchant Capital, which invests in Sub-Saharan Africa. Jan, are Nigeria and South Africa, are they less attractive, would you say, as investments at the moment?
Well, I think we look at across Sub-Saharan Africa, so we look at various different markets, and you actually have 12 local exchanges in those markets outside of South Africa. So there's a lot of interest and focus on Nigeria, South Africa, Kenya. And yes, they are the biggest drivers, the biggest economies, and Nigeria being the largest population. But I think there are many other markets you can also look at. So if I can take you through a few examples.
Yes, if you would, yeah.
Maybe on the west coast, you have a country like Ghana, which we know has had a lot of problems in the last year, a lot of currency pressure, really stemming from the government's imprudent financial management, if you can put it that way, putting pressure on inflation and interest rates and hurting the currency quite a bit. But the stock market was actually, in local currency terms, flat, and you had a few good performance from the banks, as an example, which do well in the high interest rate environment. And if you look at other markets in Southern Africa, a country like Botswana has always had a very high governance standards, high ratings. They've had a smooth election last year, so stable GDP performer, you can get 5% plus GDP growth, and you've got interesting companies on the local stock exchanges, like the brewing company Sechaba posted a 50% increase in their stock price last year. On East Africa, a lot of talk about Kenya, obviously, the Tanzanian gas discoveries, but neighboring Uganda, right next to Kenya, benefits also from the local regional integration. They've had a 33% stock market increase last year. And a local electricity distributor, Umemi, has posted a 38% stock market return, really driven off energy investment, high capex and infrastructure spend, reduced energy losses, and increasing customers to their network. So,
well, it's interesting because we hear so much bad news, and frankly, all over the world, the media reports so much bad news about Africa, and yet there are these little stories that you don't often hear about, and those are the great investments that people can get involved in.
Well, exactly, and I think as you go into each country, you find it's very different. You can't tar it all with the same brush. Every company is different, every sector is different, so that's our job really, and we get paid to find these pockets of value where you've got a good growth story, good fundamental prospects, and you can get a good entry price going into the market.
Now, obviously, a lot of commodities industries have been suffering particularly in the last year or so. The question is, what are the real growth industries throughout the sort of lesser-known parts of Africa? Which are the industries to look for rather than the countries, would you say?
Well, I think agriculture is the mainstay of Africa, and definitely on the employment side. So there's most countries are implementing agricultural reform, trying to stimulate growth, do more beneficiation in the country. Cross-regional trade will benefit from that, so that's a sector to watch. Infrastructure spending in East Africa in particular, upgrading their transport networks, upgrading the cross-border customs, etc., and a lot of investment into power as well, which unlocks many other industries.
Where would you put your money right now then?
Well, we are cautious on West Africa, cautious at the moment on oil exporting countries, which has, we need to see how this oil price situation plays out at the moment and where it settles and what the prospects are. But we look at diversifying countries. Ivory Coast is very high GDP forecast growth. Mauritius has got a very different dynamic, and like I said, we are positive on Uganda and positive on Kenya, and many of the oil importing countries benefiting from low oil prices.
Oh, great. Well, a lot of interesting opportunities to look out there for. Thanks very much for joining us, Jan van den Berg.